Good day, ladies and gentlemen. So in this video, I'm going to be teaching you how to effectively buy in a bullish market and how to effectively buy in a bearish market. Okay, so this is SMC ICT concept. You really need to learn and understand this. Okay, because this is one of the reasons why a lot of traders enter a buy trade, then the market goes past their level to hit their stop loss. After hitting their stop loss, it turns around and moves in their direction. That's because they actually bought from the wrong PD array. Okay, your PD array can be an order block, it can be a fair value gap, but it has to be properly positioned, and that's what I'm going to be teaching you in this particular video. So let's start with the bullish scenario. Okay, so if you are in a bullish market, most definitely you would expect to see something like this, giving you higher highs and higher lows. Okay, so once you have this kind of setup, once this high gets broken, you expect an higher high to be created, right? Good. So once this higher high has been created, and then you have this low right here, the set of candles between this high, okay, set of candles between this high and this low is what we call the trading range. Okay, so that's your range, that's your trading range. All right, so what do you do with this trading range? This trading range, you can get a Fibonacci. Let me remove this. You can get a Fibonacci retracement tool, then you fib from this low to this high. So your Fibonacci will definitely have a 50% level, so you want to take advantage of that 50% level. Anything below that 50% is what we call discount, and anything above that 50% is what we call premium. So when you are buying, you need to focus on the discount areas of your trading range. Okay, so when you check the discount area, that's the area below the 50% of that range, you'll be looking out for things like the fair value gap, alright, or order block. It could be an order block entry. Okay, so that's the best area from which you should be buying. So let's say you have something like this. Okay, now this is your low and this is your high. These candles in between is your trading range. The way it plays out is that you could have a fair value gap somewhere here, another fair value gap somewhere here, and another fair value gap somewhere here. So which of the fair value gaps are you going to use in order to go higher, to enter your buy trade? Okay, so for you to know which one to use and to avoid confusion, so you don't use the one that is this high and then price goes past it, to come and tap into one that is a little bit low before pushing in the opposite direction. That's where you need to now apply what I'm teaching you. You get a Fibonacci retracement tool, fib from this point up to this point, then you check the 50% line. Any PD array below the 50% line should be the one you can utilize in order to enter your buy trade to move in the upward direction. Okay, so by the time you get your fib, and then you fib from this level, you're gonna start it from here, then you push it up. Your 50% line could be, let's say, somewhere here, for example, and maybe there's a fair value gap below that. Then you can use a fair value gap as your entry position in order to move higher, because the fair value gap is properly positioned at the discount level. Okay, anything above your 50% is premium. That's when you are buying. Okay, so the reverse is the case when you're dealing with a bearish market. So in a bearish market, you're expecting to see lower lows, lower highs, lower lows like this. Okay, so once this low gets broken, you're expecting a lower low to be formed, which is what we have here. So this is the lower low, and this is the high leading to the lower low. Now the set of candles between this lower low and this lower high is what we call the trading range. So this is your trading range. The idea of the trading range is that you're expecting price to pull back within that range before it gives you a continuation, which is going to lead to a fresh lower low. Okay, but where it's going to pull back to exactly could be confusing, because you can have a fair value gap right here very close to this your low. A fair value gap would form here, another fair value gap would form here, another fair value gap would form over there. So that brings confusion as to where to enter. So sometimes you could enter right here only for price to go past it and tap into a fair value gap that is deeper. Okay, so what you do in a situation like that is you get your Fibonacci retracement tool, flip from this level down to this level. Okay, so your 50% is going to be maybe somewhere around here. Then you check anything above your 50% is going to be premium. So it's the other way around for selling scenario. Above the 50% will be premium, then below the 50% will be discount. You want to actually sell from a premium. Okay, so you look for maybe fair value gaps that are above the 50%, excuse me, that are above the 50% of the Fibonacci retracement. So check fair value gaps around that region. Okay, if there's no fair value gap, check if there's an order block you can find there. Okay, so that's where price could possibly retrace to for you to take your sell trade. Now let me tell you something. If you follow these rules, what will happen is that sometimes I'm going to miss some trades. Okay, because there are some situations whereby price is not going to retrace into okay price is not going to retrace into that discount area when you want to sell. Okay, so it could just retrace a little bit, maybe about 40%, not even up to 50, then it will push. All right, so you're going to miss some trades, but when you do catch a trade, it will most likely go in your favor. Okay, so that's the first thing you need to know about this. And the advantage of this also is it keeps you away from entering bad trades. Okay, if you enter a trade, maybe you have something like this. Let me show you. Let's say you have something like this. Now this could be very let's see, no, I want to show you something good. All right, so from this high to this low is your trading range, and let's say you don't want to follow the rules I just taught you, and you have a fair value gap here, and you feel, oh, the fair value gap that is closest to price action is the one you want to use because you don't want to miss out. So when price comes down, take your buy trade from here. Definitely you want to place your stop loss a few pips below that level, and you are looking at the possibility of price pushing in the upwards direction. So instead of that, price goes past, triggers your stop loss, entering another PDRA, maybe an order block that is below the 50% level, and then it pushes up from there. You know how painful that's going to be. You got the direction right, but you were stopped out before price moved in your direction. So this is what the system I just taught you is going to help you avoid. Okay, so let me apologize for the way my voice is sounding this early in the morning, so my voice is not that clear, but I believe you can still get to understand and hear everything I am saying. Okay, so basically that's just what I have for you this morning. If you got any value, subscribe to the channel and turn on the notification bell. I'll see you in the next video. Thanks for watching.